Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, welcome back to the show.
Jim, it's a pleasure to be on the show. Today we're going to talk about a concept called gold smearing, which I'm sure will make me very popular among some people.
How is the new year treating the 2023 favorites collection?
Well, so far it's starting off quite well and promising for the Resource Juniors. We do not have a full-fledged January effect. TSX Venture resource trading volume and value, it's elevated, but it's not roaring back in a big way. But what's really interesting is that the Resource Juniors, their traded value is now consistently 70% or more of the total. And what was really interesting was this week we saw 2 days in which the new highs on the venture exchange, there was more of them than new lows. There hasn't been a day where there were more new highs than lows since January 10th in 2022. So maybe we are finally seeing something of a turnaround. Now, what's helping the market out a lot is that gold has been rising. It managed to make it over $1,900 today. Yesterday we saw the latest CPI figures that dropped to 6.5% from 7.1%. That's still a long way from the 2% target of the Federal Reserve. And I don't really quite understand why the prospect that inflation is going to disappear is supposed to make gold go up. It was actually quite terrible trading below 1,300 during the past decade when inflation was below 2%. But there's other reasons for gold to trend higher, which probably have less to do with inflation than with looming changes in the world order. And we've also seen copper breach $4 a pound. And iron, it's now in an uptick. And this seems to be in anticipation of China working its way through the consequences of the zero COVID policy and getting back to growing its economy. The only metal that we've seen go down is lithium carbonate, but that was the star performer last year. It had ramped up, 1,000% and was parked between $30 and $35 a pound. It's pulled back from a sort of $36 peak in December down to $32, and that doesn't really matter. The optics might bother some people who are into lithium stocks, but everybody's assuming $10 to $15 a pound long-term for lithium carbonate anyways. And the reason it's pulling back is that we're starting to, with the Chinese Lunar New Year coming, January 21st, producers in China are getting rid of stock. They don't want to be holding inventory over the holiday. All those people who are catching COVID in the big cities, they'll be going home for the holidays, spreading it all over the country. We don't know quite how quickly China will bounce back from its holiday and widespread COVID infections. But there is this general feeling that China's going to get back on track. The supply chain bottlenecks will disappear, and that could actually help pull interest rates down insofar that it was bottlenecks that were keeping forcing prices to go up as goods were simply not available, so people had to pay up to get it. And my KRO collection of 16 companies, it's up 5.4% as a group. That's not as good as TSX Venture Index, which is up 7%. Gold is up 4%. But 9 of the companies are up. 7 of them are slightly down. And I have a very good feeling that this year is going to shape up quite well. Not a roaring beginning in terms of the sort of January effect that we often see when the new year arrives, but definitely a sense that the worst may be behind us, though I still personally remain cautious about how much higher they will need to push interest rates to really fulfill their goal of a 2% target, which I do not think is possible because the higher costs of the energy transition, the push to reshore into some more secure jurisdictions that are also more expensive as part of the end of globalization. I think these are going to be cost pressures that are going to show up in the inflation data that will make it very tough to hit this target. So hopefully what we see is that they settle for a higher level of inflation and don't force the economy into a brutal recession in 2023.
What sort of wind blew Dynasty Gold up 300% from 10 cents to a high of 49 cents on Tuesday, January 10th?
Now, Dynasty Gold's behavior is the kind of thing that bottom fishers dream about. This company has been a bottom crawler for a very long time. It did get up into the 20-30 cents in early part of last year. Their new focus has been this Thundercloud project that they optioned in 2018 from Teck. This is a project that it has the Pelham zone that was discovered way back in 1937. Numerous groups have looked at it after the decades. The last one to do so was a company called Laurentian Goldfields. It had optioned it from Teck and drilled some holes and then handed it back to Teck. And it eventually did a 10-for-1 rollback and became Pure Gold Mining, which acquired the Matson project that it put into production, and that ended up bankrupting the company last year. But Dynasty Gold, they reported a resource estimate of about 4 million tons of 1.37 gram per ton open pitable for these 66 holes that have been drilled in this target. They did this in September of 2021, and that's only 182,000 ounces. And so this project is sort of an also-ran that's never quite delivered. It's a orogenic gold system where it's similar to the Golden Mile near Kalgoorlie in Western Australia, where you have these gabbroic sills that have invaded the country rock, and they themselves have become the gateway for fluids. And another one of the companies that I followed as a bottom fish, Harfang Exploration, they had a similar story in the James Bay area called the Radisson Serpent project. They had identified this large golden till dispersal apron, and they traced it to this area where they were these gabbroic sills, and they did find some high-grade short intervals, but they haven't really explained the source of all this. So this company decided that let's take a rethink of this Pelham project. They did a mag drone survey over it, and they did a 4-hole drill program last year, started it in the fall, and they got the assays this year. On January 10th, the company reported the results of this 4-hole drill program, and within it were 2 long intervals, 121 meters of 1.31 gram per ton gold, and that's $81 a ton rock value using 1918 gold. And the other hole had was reported as 51 meters of 7.35 grams, and that had a rock value of 453. And this was all fairly close to surface, within sort of 150 meters vertical. And the markets listened to what the company said in the press release, saying that this demonstrates that we have not just high-grade potential, but we have also bulk tonnage potential. Significant. It's a very significant development. But the problem was, when you looked at it a little closer, all they really had encountered was a short interval of 1.5 meters in hole number 3 of 246 grams per ton. That's $15,000 a ton rock value. It's significant. It's the highest they've ever encountered on this project. And then the other hole, all they really intersected was 3 meters of 43.47 grams per ton, and that's a $2,700 rock, and that's also quite impressive. So if they had identified a whole new dimension to the Pelham system, then this would be very exciting. And an example from the past was a Great Bear, when it had optioned or acquired the West Matson project. It ended up drilling something called the Hinge Zone, which was away from the existing boring resource. and they pulled a spectacular high-grade interval, which made the market think that, wow, they found another Red Lake type system of mineralization. The stock did really well. And eventually it got taken out for $1.7 billion at $28 by Kinross. But it wasn't for the hinge zone. It was because within that property, the Dixie property they called it, they had discovered the LP structure, which turned out to be very mineralized, the typical sort of Abitibi greenstone belt orogenic gold system. They control 20 kilometers of that. This was like finding something like the Cadillac larder brake, fully mineralized and overlooked all those decades when the Red Lake district was being explored. And so the market sort of thought, well, maybe they have something like the original Red Lake discovery, similar discovery in the hinge zone. And this is a property is located south of Dryden, which is sort of in that western part of Ontario. But when the company stretched this out into these long intervals, and I applied it to my grade smearing tool, where you take the total budget of the hole and subtract the budget of the high grade interval, and then take the remaining budget and divide it by the remaining length, I end up with the hole number 2, 118 meters of 0.24 gram per ton, which is only $15 rock value. And for the other one, it's 49.5 meters of 0.12 gram per ton, which is $7 rock value. And neither of those are open pitable grade. So what possessed the management to take these very narrow intervals and stretch them out into these long intervals, which give the people the idea that, wow, they found something very new and special, and that when we put a follow-up drill onto this property, we're going to just step out from this zone and follow it, and it'll keep growing and growing and growing. Well, the reality is, when you hit something that narrow, hitting more of it is very difficult. And the stock took off. People didn't read it closely. They didn't understand that there was only one tiny high-grade interval in each of the hole. And the company's largest shareholder must have read the news release. He's technically an insider because he owned more than 10%. He managed to sell on that first day when there were 4.3 million or so shares trading. He managed to sell 706,000 shares at an average price of 34 cents. Reported his insider report the next day. This dropped him below 10%. He's now around 9%. So he is now free to unload the rest of his position. And what we saw on the day after was the volume shrank down to 802.4 million shares. Thursday it was down to 866,000 shares. And today on Friday it was 488,000 shares at around closing at 28.5 cents. This is not how a significant new discovery trades. And the people connected with this company, they all have good reputations. The advisory board is a who's who of people who know what they're doing. So I just have to shake my head that they would put out a press release like this, and it had no drill plan showing where the holes were, no indication of the dip or azimuth of the hole. Even though their corporate presentation has a graphic showing the location of all those former 66 holes and where the little mag anomalies are, they did not show us where these new holes are relative to the others. Why would a company that is serious not put out this additional information? And why would they take these short intervals, stretch them into big, long intervals that are in fact waste material, and put out a news release and say, this is evidence that we have a significant bulk tonnage potential? This is what hurts the junior resource sector, and I just shake my head over this. And I suggest that the 2 private placements that were done in December, of which 5.9 million units, full warrants at 7 and 10.5 cents. Only one insider participated. This was probably third parties. Come April, you better have your umbrella out, because there's going to be some serious April showers when this paper comes free trading, because they will not have follow-up drill assays by then, and this grade smearing will hang over this stock like a cloud for a long time.
Endurance Gold reported an impressive gold intersection for its Reliance Gold project, but the stock barely moved. Does the market think this is an example of grade smearing?
The Endurance Gold group is an extremely professional group, and it's a remarkable contrast with Dynasty Gold and the way they presented their press release. The website is actually, Dynasty Gold's website is good. It has a lot of useful information on it. It's well done. But the press release was missing many of the things Endurance Gold included with its news release. Now, the headline interval was 139.9 meters of 3.05 grams per ton gold. And that is an impressive interval. And it has it's within the Eagle Zone, it's a shallow dipping zone. It's within the Reliance project, the Royal Treasure Shear Corridor, 300 meters wide. It runs for several kilometers. The Eagle Zone is the shallow dipping zone, and it dips to the southwest, daylight's in the east, runs out of room. It does not have huge tonnage implications, but the question people have had, is this going to eventually be open pittable? And the company provided a table that had the headline, big headline intersection, and then had all these sub-intervals. And there were 5 of them or so, and they were all separate segments within the overall interval. They were careful to point out that this is not a true width. The true width of this Eagle Zone is between 15 and 30 meters in this area. But the hole was drilled at a 45-degree angle with a vertical depth of 120 at the bottom. And it was designed to test both the Eagle Zone and the subvertical South Eagle feeder zone. And when we headed into 2022, the big question was, is the Eagle Zone, with its limited running room for tonnage, all there is to this Reliance project? And last year we did get evidence of vertical feeder structures, and these ones, they can go down 1,000, 2,000 meters. It's an orogenic system, and discovering these and understanding where they are and how they work, that was a major development. And this hole, one of the last ones drilled in the year, what it is it doesn't change the company's destiny significantly, but it does open the possibility for open pit mining this particular Eagle Zone, and when it has a rock value of $188 a ton at 1918 gold. But when you strip out these five or six intervals, together they add up as almost 36 meters of 8.84 grams per ton. That's $545 per ton. But when you take the remainder, the 104.2 meters, that average is 1.07 gram per ton, which is $66 a ton. And that's a very good value for open pit mining compared to what the stuff surrounding the high-grade interval on Dynasty Gold's Thundercloud project. This tells you that, hey, when these guys go back in there this year and do a shallow drilling to do infill on the Eagle Zone and extend it to the north to connect with the Imperial Zone, we are going to see evidence of a bulk tonnage system emerge. But again, the stock didn't move because the news release also included evidence that the Eagle Zone appears to have been eroded away in the southeast direction. One hole did nip a short interval that is very likely the South Eagle feeder zone at depth, but the Eagle Zone itself, the shallow dipping system, it seems to have daylighted and disappeared at the southeastern end, and so they will only be focusing on seeing whether it connects to the Imperial Zone in 2023. But the big story for Endurance Gold is getting the permits and that for building roads on the western side of this corridor and drilling through the hanging wall in a better part of the hillside so that they can chase the the South Eagle feeder zone structure deeper and deeper, and perhaps eventually get to a depth which would be equivalent to that of the Braylorn system, where you have 15 gram per ton veins present, and the market really wants to see them go beyond this upper part of this epizonal orogenic system and go down plunge, chase it deeper, and that's going to be a major part of this year's program. They have $3.5 million working capital, not including the value of their Inventus position. So they do not need to finance. They believe they'll have everything in place to resume work in April, because this is in a part of British Columbia where you're not stuck waiting for the snow to melt and can only get in there in June, such as in the Golden Triangle. So this promises to be a very positive year, and this stock, the price has been creeping up as people digest. The news only came out on Thursday, January 12th. So I expect that as people better understand what this all means, the market will continue to appreciate that this is shifting from being a emerging discovery to a confirmed major discovery. And earlier in January, they also put out a press release updating on a soil and biogenic sampling program they did on the Olympic project. And it was a fairly large area they sampled, and they ended up identifying an arsenic elevated trend parallel to the Royal Treasure shear trend, but on this new option, the Olympic property. And they will do follow-up sampling this year to increase the density. In the eastern part, they found an outcrop they call Enigma, which has some very nice, almost 10 gram per ton gold value, along with antimony value, which is evidence of quite high up in the epizonal orogenic system. There, they had too much glacial fluvial cover to get proper sampling, so we have to figure out a new way to test this area. But there could be a parallel system over to the east of the Royal Treasure shear that could become a major story in 2024. But for 2023, it is going back to the main target, going deeper, stitching together enough to perhaps set the stage for a open pitable resource estimate in 2024. And we still have 2 holes into the Imperial Zone where they're still trying to figure out what happens. This is a subvertical zone similar to the South Eagle feeder zone. Those 2 holes are still pending. No idea if they'll have anything interesting. But this hole, which is not an example of grade smearing, it's the only reason the market didn't react strongly to it is because the company does such a good job of putting all the information out there in their press releases that everybody could see that geometrically the tonnage footprint related to this particular Eagle Zone is constrained. If they had intersected something like this within the South Eagle feeder zone at a depth of 250 meters in brand new territory where this represents true width, the stock would have been $1 bid and rising.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.